Hey everyone, it's Rod Santomassimo with the Massimo Show. And I'm so excited today because, this is a special one. Not only professionally for everyone, we're talking about what's going on today, what's next, look at the past, but also a personal one because it's one of my great mentors, Mr. Jerry Anderson. Jerry is an icon in commercial real estate brokerage. He has over 50, and repeat that, 50 years of being a broker. He has personally run not one, but two national and international brokerage companies. He's been a pioneer in the single point of contact. And he's been a pioneer in what they call the master franchise model. So please, everyone, let's welcome Jerry Anderson, the one and only, to the Massimo Show. Hi, this is Rod Santomassimo, and welcome to the Massimo Show. The objective of the Massimo Show is to share how you can maximize your personal and professional margin. That's right. Let's make more money in less time. Let's turn chaos into clarity, confusion into confidence, and income into real wealth. Along with sharing my insight on how I grew a multi-million-dollar professional business, we will bring you expert advice from various authors, consultants, and industry leaders and provide you the tools you need to build that commercial real estate business and life you have always desired. Welcome to the Massimo Show. Welcome, Jerry.
Thank you, Ron. I appreciate it, and I appreciate the opportunity, although your introduction makes me feel very, very old.
Wise. I think the wisdom that will come from this session, maybe like no other session we've done here, with all our incredible guests, for the audience specifically in the commercial brokerage arena. So, Jerry, there's a lot going on right now in the marketplace, but this isn't new to you. You've seen not one, not two, not three, at least four major downturns, and we call them inflection points of brokerage. So just before we get into the history of you, what are you seeing now? And what does it remind, if anything, of everything in the past, what does today remind you of?
That's a very interesting question, because today does not necessarily remind me of any path we've been on before. If I hadn't had a little activity in the last few months and watched it, I would say, oh, this is like 2008. But it's not like 2008. First of all, we have much higher interest rates. There's going to be a tsunami of foreclosures and properties that need to be reset. I mean, one of the differences from 2008 is this time, the banks don't want the properties. They don't want them. Last time, if you'll recall, they wanted them. There's been a lot of financing in the last 15 years, Ron, with non-recourse financing. So the banks aren't necessarily interested in those properties. They don't want to be involved in the operations business. They're in the lending business. So it's going to be very interesting to see what happens with all these non-recourse loans. And I will tell you, it's starting to boil. It's like a pot at the bottom. When you boil water in a pot, the first thing you see are those bubbles at the bottom.
Right.
Yeah, that's what's happening now.
What are the bubbles, Jerry? What bubbles are you seeing that are indications that it's heating up? And not heating up in a good way.
You're right, not heating up in a good way. For one thing, you start to see some of the lenders shut down their lending completely. Now, that's been going on for a while. It's been very difficult, as you know, to finance properties. But now what we're seeing is that many of the lenders are coming out of what I call the denial stage.
Right.
Not only lenders, but also owners have been in denial. I mean, if you think about it, who's the first party to know about a change in the market? The buyers.
Yes.
The buyers are the first to know.
Right.
Because they're looking at all the risks, and I guarantee you they're paying more attention to it than the sellers are. So the sellers are still sitting there in denial. So when the buyer and the seller come together, it's a very wide gap.
Gap.
It is a monster spread. And that spread's only getting worse. Interest rates are now over 8%, which I was looking back at some of the work that I did to prepare for our discussion today, Ron. I was pretty happy when interest rates were 12%. And I was making money as a broker at 12%. Now everybody's crying, oh my gosh, your interest rates are so high. Well, they are, but you know what? It's all relative.
It's all relative.
It's all relative, and we have to be able to help the people that own real estate and want to sell it or lease it. And we need to be able to work with the buyers to put them in a position to be successful for a certain period of time of their ownership.
Okay, so here's what I heard. This right now is not, and I'm going to use the word use, I'm going to have to expand on this. This is not like 2008, and our audience may not remember 1992 and 3 like you and I do with the RTC and the S&L crisis and everything going on, but they will remember the Great Recession of 2008. But you called it a reset, Jerry. So I think you said it earlier, you call it the Great Reset. So help expand on that idea. Why is now the great, and I agree with you, but why is now the Great Reset?
Well, last time we had some, meaning 2008, 2009, I call it the financial crisis, which it was. We had bridge loans in place that could be refinanced. We have bridge loans today that are significantly less than what the interest rates are. And those bridge loans are not going to be reset. And it seemed like a good idea a couple of years ago. I'll just take a bridge loan and I'll get to the point where I can refinance. You know, interest rates 3-4%. I'll refinance. Even if I have to refinance at 5% as I look to the future, I'll be fine. But nobody anticipated the interest rates that we have now. So those non-recourse loans that are out there, who's the lender going to chase? There's nobody responsible for it other than themselves. And that is going to be an interesting scenario. Now, we're just starting to see some of that crack in the armor, if you will, but it's out there. But the interest rate percentages have really been very, very low, in my opinion, for way too long. Now we have to reset all that. We have to get people accustomed to higher interest rates. But if you own a property and you are set for a certain period of time at 3 or 4%, why would you want to sell? There's nothing to buy. All you're going to do is pay capital gains tax, move on, have a higher interest rate. So it's a reset. That's what I think it is. The dilemma for us brokers is we're not going to know who controls the property. One of the things I believe when we go through a reset or a downturn is you have to really pay attention to who controls the property. And it was pretty easy last time around to figure out who was controlling the property. And many times they welcomed us with open arms as a broker. Mm-hmm. Just get me out of this thing. Help our portfolio just so that we have loans that are producing.
Yeah, right. Get it off the books. Help us out. But you're saying now it's going to be hard to identify points of contact or who controls the deal. Why is it harder today, Jerry, do you think, than it was during the Great Recession?
Well, I think it's harder today because most of us have some type of a CRM system.
Yeah.
And we have an entity or an individual in our CRM system, and they don't necessarily stay in touch with us as a broker and say, oh, by the way, I'm going to give my property back to the lender because I can no longer handle the payments, or I can no longer handle the taxes, or in the state of Florida, I can no longer handle the insurance.
Correct. I'm familiar. As soon as you said, I knew Florida's insurance. That's a major issue for our members, Florida and insurance. Killing opportunities out there.
It's impossible in some cases. And there are a lot of residential properties, homes that people live in that are self-insured, myself included.
Amazing, crackers. Okay, let's get back to brokerage. So you're seeing this great reset, right? And a lot of brokers are saying there is no velocity. Well, there was no velocity in 92, 93, 94. The cry was stay alive to 95. I lived through it. I was a broker back then. I know what it was about, right? There was no velocity during the Great Recession in 2008, right? I remember you and I specifically walking on the beach one day going, what the hell is going on? I know that for a fact. I remember those days. And certainly during the pandemic, there was very little velocity, but brokers still made money. I mean, I tell you, I know, because you work with brokers, hundreds of brokers. I work with thousands of brokers. They were still making money. They were still creating fees and opportunities. So, Jerry, do you see opportunities still right now? I see it every week. I see it every week where we do pipeline reviews with our clients, closing deals. What are you seeing? If you were running a brokerage firm like you used to do in the old days, running 2 international brokerage firms, and you were telling your brokers, they came to you and said, Jerry, there's nothing happening. There's nothing I can do. They complain and whine. I'm sorry, making excuses about the market. What would you share with them to do?
What I share with them is the fact that they've had it pretty easy for the last 10 years, which of course none of them want to hear. They don't want to hear that.
No.
But the habits that they gave up, they're going to have to reinsert. In other words, now they truly are advisors. You have to be an advisor in this marketplace more than ever before because people don't need you. I mean, they don't need you to sell. They don't need to list their properties. So you have to help them figure out what they do need. And what I mean by that is, and I think it's a beautiful time as a broker. I know this sounds sacrilegious, but I think it's a beautiful time for you as a broker to make calls and say, let me share with you what's happening. Because we have our thumb on the heartbeat of the market more so than an owner who owns one property. So
absolutely.
If I were brokering today, and I'm not, as you know, I just finished my 20 years at SVM. You have to stay close to these owners and say, let me share with you what I'm seeing. For example, I could see an introduction letter or an introduction phone call. Do you know what the property 2 streets down just sold for? Do you know what a property almost exactly like yours sold for? What's the impact of Walgreens closing as many stores as they're planning? You know, if you're sitting on a Walgreens as a net lease, you probably 5-10 years ago thinking you're golden. You know,
right.
It's a net lease. Well, you never planned on Walgreens closing those stores. So you very quickly are going to go to the paragraph in your lease that talks about the closing the property, closing the store, because now you need to do something with that property.
And I agree. And it's not just owners, it's also tenants. If you're a tenant rep, landlord rep, or you're financing, you have to become the authority versus the commodity. You must become the advisor versus the facilitator broker, because we may not like to hear this. It's not going to be as much velocity. We know that. There's not going to be as much velocity in the marketplace as in years prior. And that's why they call it downturn, folks. It's just very simple. So, but Jerry, what we're sharing at Massimo with our clients is, in fact, I just got the phone with a young man who was always a top producer in a national company. And this year he's struggling. And I looked at his activity levels and I told him, this is not a time to take your foot off the pedal. This is the time to jam that pedal to the floor, and more volume, more calls, more effort, more work if you want to just maintain a sliver of market share to get what you're getting. So I agree. You have to be the advisor, but you also have to pump up the volume. Jerry, what do you think?
I agree. I think the cold calling still lives. You have to call on people that control the asset. But today, I think your cold calls are completely different because now you have information to share. Because I will tell you, as a real estate owner, you don't pay attention every day. You just don't.
No. Hey folks, Rod Santomassimo with the Massimo Group. And did you know we work with thousands of your commercial real estate peers over the past 15 years now? And we've helped them build the business and the life they've always desired. And yeah, we have programs now for every level of success, experience, and yeah, even budget. So if you're tired of living on that transaction treadmill, of living in the chaos and the whirlwind of commercial real estate, if you want more clarity, more control, and more consistency, and yeah, higher commissions, give us a call. Visit us at www.massimo-group.com. That's www.massimo-group.com and schedule a free strategy session today. Okay, this is a rare opportunity for our listeners because, I mean, very few people have been doing brokerage as long as you have. Very, very few. So tell me what you found during your career to be the greatest inflection points, technology, policy, trends. What were just think back. Give me a couple of things you said, this is changing the way we're working. Because I personally think that the greatest inflection point beyond the economy from a technology standpoint is happening right now in brokerage. I personally believe this is the greatest accelerator in my lifetime. I'm doing this for almost, not quite 40 years on what we're doing here. So, Jay, what's your approach? What's been the big changes for you over those 50 years?
Well, I can go way back to a change that happened, and I thought it was going to force me out of the business. I literally thought it was going to force many of us out of the business. And that was the Tax Reform Act of 1986. And you're old enough to remember that.
Yes. I was my first year in grad school. We were studying it in the second year. So, yeah, I remember.
Yeah. So I was at CB at the time in Florida, and we saw all these changes in the tax law. We had been selling real estate based on, and I've spent most of my time as an investment broker, as you know, so it's all investment properties. We sold the 4 benefits of real estate. And one of those 4 benefits was tax benefits.
Yes.
In 1986, those were stripped away. And for those of us that were selling mostly tax benefits, and that's what syndicators were doing and brokers. I mean, I spent 20 years as a CCIM instructor teaching brokers how to calculate after-tax returns.
Right.
Well, once those tax benefits were stripped away, the after-tax returns were dramatically reduced to basically just cash flow and any buildup in equity if there wasn't. So that scared the tar out of me, but we did get through it. And then the next one, ride that I would say really impacted the industry from my standpoint was technology.
Mm-hmm.
I think about something I did this morning. I looked up sales in a couple different places.
The kids have no idea what you're talking about right now.
Okay, let's look at LoopNet and see what's for sale. You know, let's look here and see what's going on. I mean, we just didn't have it.
No.
Did not have it. So today, there's 3 or 4 pieces of technology that dramatically changed the industry. Any software that can help you understand who owns what. Any software that can give you their locations, their phone numbers. Reonomy is one of them right now.
Right.
How easy can that be? Just to look up who owns what.
Well, since you and I used to go to the library on microfiche, and no one knows what microfiche is, trying to figure out an owner's name or a tenant's name. So, yeah, huge difference.
Right. So technology has changed all that. Brokers are better now that they have CRMs.
Mm-hmm.
I know there's some people that don't have any type of CRM. I see all these discussions about which CRM is better, and the one that's best is the one that you know how to use.
That's it.
Plain and simple. Don't complicate it. I see brokers switching all the time. Well, you know, I tried this, but I didn't like it. I was going to use this, but I didn't like the fact that it didn't catalog the properties. Or I'm going to use this one because it came free with another piece of software. The best CRM is the one you use. I can remember using ACT, A-C-T. You were an ACT user.
I loved ACT. It was great.
And it was hard to give it up, wasn't it?
Very hard. Very hard.
So one piece of advice, get yourself a piece of software for you to track people and properties, because that's the only thing that matters.
People and property. So for you, one major inflection was the tax changes of 86. Then we have technology, software, CRMs. Any of the major inflection points during these 50 years that you said this is going to change the way we work?
I think the structure of brokerage companies.
How so?
Today we have brokerage companies that are one company throughout the country, brokers in each state, or we have brokerage companies that are franchises.
Mm-hmm.
And I know this is going to sound sacrilegious, but I can remember when none of us believed franchises were going to work.
Yeah.
I mean, we just didn't think it would work. When I say franchises, I also mean the networks. So
yes.
NAI, although it was never a franchise, it's a member organization. Some of the others, like Remax or Coldwell Banker Commercial or even SVN, those are franchises. And I mentioned those last 2 because those were inflection points. When Coldwell Banker started to franchise their commercial companies, that was an inflection point because the name was well known. The name had been around since the early 1900s, but it had never been a company where you owned your local office. You were a part of a large company. Of course, LCB is a public company, and there's a number of other public companies out there, but the franchises are doing well. I mean, SVN has a nice niche for what they fill. I mean, they have it figured out. I think Coldwell Banker Commercial had it figured out. I'm not sure today with some things that have happened. Their focus is mostly on residential, but that was an inflection point for me. And I was working in Ohio about 1980, and I had taught a CCIM course in California. And I ran across, at that time, a Coldwell Banker franchise. Mm-hmm. And I came back to my hometown in Canton, Ohio, and I told my partner, we need to change our name. He said, you're crazy, Jerry. Our name has been in this town since 1906.
Right.
I said, I know, but nobody knows us outside the town. I said, in fact, nobody hardly knows us outside the neighborhood. And we were the largest residential and commercial firm in Canton, Ohio. So when I came back and started to pitch that, my partners thought I was crazy. But I had been, and this was a benefit of being involved in the CCIM program, I saw what was happening in other markets. And today, we don't think about that much. You went to an SIOR conference and you talked to people from many different markets. We didn't used to have that. Even the CCIM group, until probably the 90s, didn't do a very good job of getting together. This is embarrassing. My CCIM number is in the low 700s. Yes, I know.
Okay. So you're seeing a transition, probably an evolution of brokerage structure, right? And so what I'm seeing now, and you please expand on this, I was last week at the SRR conference in Chicago. It was a phenomenal conference. 1,000 brokers across the globe got together, but we're seeing more of these virtual models being created, right? Keller Williams was certainly one of the first virtual models. You can argue SVN and Coldwell Banker were the first virtual models, but they're going really much more no office, work out of your house, or a small office, independent office, focus on our software, large margins, large commission splits. So you have Keller Williams that's done it. And now you have the explosion across the country of a firm called EXP doing it. I know now they have James Swan running the firm. I saw him last week there. So is this the next evolution, Jerry, of commercial real estate brokerage?
I wrote a white paper a number of years ago. You may remember it. The title was The Commercial Real Estate Brokerage Industry is Broken for both brokers and associates. And what's happened is we just, as a brokerage company, you had to give more and more commissions to the agents. Eventually to the point where the water got so hot, it actually killed the frog.
So what you're saying is the commission rates for national firms were so high, when it came to the bottom line, they couldn't exist anymore. And in fact, we see this every time a down point. The major firms, I'm not picking anyone in particular, Brian, we know this. CBRE, JLL, and others start firing brokers, right? That just can't afford them. So I get it. What you mean by it's getting too hot. Right.
Right. And I believe the industry has been broken for a number of years. And I don't necessarily think that the firms that provide the high commission splits, because they don't have any expenses, because the expenses are on the agents, I don't necessarily know that that's a model that's going to work for all companies. But I do see a shift there. And you mentioned EXP and James. I've been at SVN 20 years. And I helped them expand the company nationally. I was president of SVN for a number of years. When we hit the downturn, when you and I were running the beach in about 2008, and you looked at me and said, what the hell am I going to do? And I looked at you and said, Rod, I don't even know what I'm going to do. Well, what I ended up doing was coming back to Florida, because I was traveling back and forth from Florida to California, and building up the state of Florida for SVN. And I did that because we looked at, boy, this was the day. Sat down with Mark Van Ness, who owned SVN, and we looked at the future. And he said, I don't know how we're going to be able to afford this payroll of 90 people.
Right.
And he said, Gary, you're the most expensive one in the payroll. And I held my breath because I thought, I know where this is going. Well, what we ended up doing is I came to Florida and built the state of Florida for SDN and stayed with the company. I was not president, but I was, for a lack of a better word, the master franchise of the state of Florida. And my job was to bring in, and by the way, this was all contingent revenue. So I've always loved contingent revenue because you get paid what you're worth.
Yep, that's brokerage. And for our listeners, it's funny because Mark Van Ness had the same conversation with me after Jerry left because I was hiring the payroll.
Right, you were the hire.
So I was the next guy out, and I was offered to do what Jerry did in North Carolina. But instead, I decided to create the Massimo Group. Boy, am I glad I did.
That was a good choice.
That was a good choice. So, Jerry, is this the evolution, though, of where's brokerage going? If it was broken when you wrote the paper, is it still broken today? And if so, how do we fix it?
How do we fix it? I guess if I knew how to fix it, I'd be out there doing it. I don't necessarily know if there's a three-step fix. I do think what you're seeing at the companies that have high overhead, they suddenly are not able to provide the services that they did in the past.
Absolutely true.
Everybody laughs about it, but CoStar is a wonderful tool. The problem with it from an ownership standpoint, brokerage-wise, is their model, because everybody has to pay for the subscription. At SDN 2006, 2007, we had $45,000 a month for each office just for CoStar.
Wow. Where do you see brokerage going? Is it away from the CBREs and the JLLs? And people argue the opposite, that it is no choice, but everyone to be consolidated and go more towards the larger national, international firms versus new models. What's your opinion?
I've had my eye on a new model for a while, because one of the things I think that the industry has always needed is the ability to provide healthcare. Now, some companies do that, but you cannot do that if you're a franchise model or a member model, because the old folks drive the premiums up and the young folks can get a better premium for the health insurance somewhere else. So I really like what EXP is doing. And I don't know how much attention you've paid to them, Rod, but in about a week, I'm going to move over to EXP.
Wow. You heard it here, folks. Whoa. Okay, breaking news. Breaking news. Jerry's going to a third national brokerage company. I didn't realize that. Okay, so Jerry, what are they doing that's different?
What I think they're doing different is they have a high commission split if you are productive, but they also provide all the tools that some of the other large publicly owned companies are providing. I've read some of your other podcasts where you talk about, is branding better for the individual or for the company? To have a brand of your own? Well, I would say yes. If you read your book, in fact, all your books, folks, if you don't do anything else, read Rod Santomassimo's books. All of them. The first one, the second one, the third one, the fourth one, read them all. Because in there's a lot of nuggets. And the nuggets have to do with, do you brand yourself or do you brand as a company? And Rod, I see you doing a little of both.
Yeah. It depends on your situation. Obviously, as the owner of the company, I want to brand the company because that's enterprise value. But I absolutely agree. Brokers should brand themselves 100%. And if they're tied by their corporations, that is a restriction to their growth. And believe it or not, though the corporations understand this, it's a restriction to the corporation's growth. 100%. That's right. They haven't figured it out.
Right.
But let's end this up. I want you're just 50 years. You've seen every downturn in those 50 years. You've succeeded and thrived through downturns. You could still be running many brokerage firms and now going to help advise another firm. If you had a singular piece of advice, besides reading my books, but if you had a singular piece of, or being coached by the Massimo Group, let's put it that way, what would you share with not new brokers? New brokers have different advice, but for brokerage just in general, what would you share advice if someone said, Jerry, what's it going to take for me to truly succeed in brokerage? What do you think it is?
You have to really understand where the market is, and you need to convey that and its implications to property owners, property buyers. It's not only seeing the changes that are on the way, but you also have to make people aware of them. And that's why your cold calling completely changes.
Go full circle to how we started. So as we say at Massimo, don't be the commodity, be the market authority. According to Jerry Anderson, you must not only know the market, but be able to articulate how that impacts your prospects and clients.
Correct.
Jerry, I cannot thank you enough for all you do for the industry and certainly for me personally over these many years. So folks, the one and only Jerry Anderson, he dropped a lot of knowledge on you today, but as my third book would say, knowing isn't doing. So it's nice that you know, but now go out and do. Jerry, thank you so much for being part of the Massimo Show today.
Thank you, Rob.
Okay, guys, everyone take care. We'll talk to you soon. Hey, that's it. That's a wrap for this episode of the Massimo Show. Once again, hopefully you learned a lot of value provided by our guests, or maybe by me. But the key is this. As we say in Massimo, knowing isn't doing. So don't kid yourself. You have to go out and do the work. You have to implement what you learned if you want to get the results. And please, if you like this episode, please share it. Share it with your colleagues, share it with your friends. Heck, share it with your dog. Just share it. And we look forward to seeing you next time on The Massimo Show.